Hello and welcome back to this month's Market Pulse, friends. Okay, let's jump right into it today as we've got a lot to cover. Now, firstly, taking a closer look at interest rates, and after two consecutive rate reductions from the Reserve Bank of Australia, they've actually chosen this month to leave that on hold. Instead, taking an approach of assessing the impact that the previous two rate reductions are having on our local economy and property market. However, do keep in mind that the RBA have headlined that there is potential for a further rate cut across the coming months prior to Christmas, which continues to remain aligned with their current approach of easing of monetary policies. Now, of course, to that all-important indicator of the market, auction clearance rates. Now, we usually track most of Australia's main capital cities, Sydney and Melbourne. These, again, according to the most recent realestate.com.au statistics, have been holding firm in the 73 to 77% range over the past 4 weekends consistently. Now, this has been the strongest and most consistent period of auction clearance rates we've seen in our Melbourne property market since 2016 and 2017 periods. Now, also interestingly, Heron Todd White have recently released their latest property clock for August. Now, this details what current phase of the property cycle Australia's key marketplaces are at. Now, for Melbourne, this currently shows that the housing and unit sectors have reached the bottom of the cycle, and in some price points are starting to move into the early stages of recovery. We certainly feel that's a little more advanced in the housing sector above and beyond units. Now, this was clearly illustrated in a recent auction we sold at 20 Murphy Street, Oak Park, set on a 705 square metre block, which was one of the first that saw interest from the investor, developer and home buyer markets start to re-emerge. Now, this place was furiously fought and sold under the hammer at auction for $915,000. Now, given only 2.5 months prior, a home in better structural condition, which was brick veneer on a larger block of 709 square metres, only sold for $800,000. Now, that's a whopping $115,000 difference in close to just 3 months. So this segment of property is certainly seeing some movement, and there's clearly been defined and tangible changes in our local marketplace, of which we're feeling is more pronounced in that housing versus investor sector. Hey, so thanks for tuning in again for another Market Pulse edition. We look forward to seeing you out and about, and as we always say, hit us up on social, email, phone, however you like how, if you've got any questions or anything we can help out with. Now, with things starting to wriggle and shake, if you've been holding back, we strongly recommend you get out there and go buy some property. Until next month, bye for now and stay warm.